Hi, welcome to Round the Table with Gratz Park Private Wealth. I'm Sherry Hawley, President and Senior Wealth Advisor. So wrapping up the month of July, pretty much the S&P 500 was unchanged. However, one significant point is that 60% of the companies in the S&P 500 saw growth. Now remember, the S&P 500 index, which is the broad index that we use to kind of see how stocks are performing, that's the largest 500 companies, it is cap weighted. And that means the larger the company, the more impact on performance it's going to have. Thus, that is why these 7 mega cap tech names, the Amazons, the Teslas, the Apples, the Microsofts, the Googles, have more impact on the index than the other companies. But if you were to equal weight that index, meaning all companies had the same impact, we would have seen a 1% return from the index for July. The reason I'm making this point is that is what we're starting to see in a rotation away from just these mega cap hyperscalers, AI hyperscalers, and people are broadening their investments into good quality value companies. And these are the companies that are benefiting from AI. So this rotation from growth to value is significant because growth has really been the winner the last few years of the S&P 500. So let's keep that in mind. Secondly, earnings season started in July, the second quarter earnings report. And once again, we're seeing just record numbers, not just from the mega cap tech names. They are growing their earnings in that 40% range and above. But all of these other 493 companies are seeing really solid earnings growth and higher than our projections. They're seeing earnings growth in the 20% levels. And what's also interesting is at this time, even with stock prices rising, we are seeing price to earnings ratios dropping. So the multiples are going down on the S&P 500. We had reached 22 times earnings. That is moving down. We're at around 20 times earnings. That's important because we talk about valuations and not getting too overvalued in the stock market. That is not the scenario right now because these earnings have been so significant. The other area that is certainly being talked about is the geopolitical front because the Iran conflict continues to go on. We thought it might be getting wrapped up after the ceasefire in June, but once again, conflict started happening, bombs started being shot, and we are seeing some volatility because of that, especially in oil prices. Oil prices went right back up. They've come down slightly, and certainly any time that the president talks and says that they're close to a negotiation, the market tends to rally. So we're going to see this back and forth until this conflict is resolved, because the longer this goes on, as we've said, the more impact it has on inflation. And the higher and more robust inflation is, and if we can't get it down, that means the Fed's going to have to act. And if the Fed raises rates, that's going to be tough on these hyperscalers, because as they borrow money and they have to borrow at higher rates, that can finally start to impact their bottom line. So that's an area we're keeping close attention to, is the conflict with Iran and how the Federal Reserve and Chair Kevin Warsh is handling this. So far, the 2 meetings he's conducted, he has not changed rates. But the market is pricing in 1 rate cut later in the year, about a 68% chance of that happening. 1 rate cut we could probably absorb, 2 would probably really have an impact on the stock market. So let's keep a close eye on that. And then of course, in the near future, we'll have the midterm elections, which always creates some volatility because of the uncertainty surrounding that. Once it's over and we get some type of certainty, we'll go back to looking at fundamentals. And right now, the fundamentals have been pretty resilient and solid. So stay tuned and we'll visit again next month. Thanks for joining me.